Good evening, all. Thank you for joining in. Today, we have a special speaker for the day. Today we are joined by Mr. Niraj Chandra, who heads the product at Bank of India AMC. He brings with him over 18 years of experience working within the BFSI space. Before joining Bank of India, he was a part of Bandhan and Canara Robeco Mutual Fund and has provided significant contribution there as well. I welcome you, Mr. Chandra. You can take over the session.
Thank you, ma'am, and always an opportunity to share our thoughts. Thanks, NGEN Market, and also all the participants who are here today. It's a great opportunity for me, and of course, from Bank of India Mutual Fund, we welcome you all to the call. Today, as we have highlighted, we will be talking about the financial services market precisely, and it more or less highlights the opportunity which we see in the market in terms of how the India economy is expanding. So I'll share some of the data points which are more intriguing, and also these are some of the key highlights which are very important to understand when we look at from the investment perspective. So what we'll do is we'll take you through the entire opportunity which we have from the financial services sector, and then we will open up for discussing the questions if there are any from your side. Let me know if the screen is visible to all of you.
Yes, the screen is visible.
All right. Due to some network issue, I'll be putting my video off for timing, and then during the Q&A, I'll open it up if it's okay.
Yes, sure, that works.
All right. Thank you. So as you see, what we are talking about today is precisely about the India ecosystem, and we all are part of it. And as we do the transaction related to our day-to-day stuffs, and also even for any of the overall financial transaction across the universe, I mean, it is dealt by one of the key segment of the entire financial ecosystem, the banking industry. And banks are always connoted to be directly correlated with what your ecosystem, I mean, the economy is about. So actually, when we look at the financial services sector, it is not about one sector which we look at like IT or pharma or any other segment, but it actually is the entire ecosystem. I mean, the entire structure which rotates the opportunity across segments and fuels your country's growth opportunity. So every economy always looks after its financial stability as part of it when it looks at in terms of the overall stability as an economy it provides. So the ecosystem that fuels India growth story or the India growth journey is precisely the financial services sector which we are talking about today. Also, I would like you to share your thoughts during the discussion. This is not a monologue, of course. I would like to have more of discussion on this maybe for half an hour, and then we'll see what we can get into in terms of highlighting the know-how of this entire discussion today. So, hope my voice is clear to everyone.
Yes, it is.
Right. So, as we know, this is we are talking about the India economy. So, we'll restrict to the discussion on India. There will be some relation to US market as well to look into what kind of opportunity it provides in terms of the relevance of this segment versus the global parameter. So, we'll look into the ecosystem first, how this entire sector has evolved. If we look at India, I mean, in terms of how it reflects the economy part, always when we look at from say last 100 years, of course, it was one of the key segment which actually links it to the GDP growth of particular economy precisely for India today is banking system. Banks are actually the initial stage of growth which actually this industry had looked upon, and on that pillar entirely other segments have cropped up. So bank was one of the initial industry, I would say, which was part of the entire financial services ecosystem during the evolution over the last 60, 80 years, which we have seen. Then there is a kind of reachability which it provided to every one of us, be it a corporate, be it smaller unit who are working at different locations of pan India. So there was financing which was also provided as a support. And when there was some of the hard-coded documentation which were required in terms of due diligence or the compliance part, then the opportunity came into the NBFC segments, which were like providing it to non-banking and financial segment of the entire economy. Then actually, it actually went into like shifting into more of savings and overall inclusion, where it was an investment opportunity looked into. Then it came up with the capital market, which we see today, be it the listed companies like BSC and others, or we see asset management company which are part of it. I mean, that way it has actually evolved. And today we see some of the other universe which are actually looking into this segment, are insurance market, and also some of the segments like we see for fintechs precisely. And these are great opportunity where we see some of the risk mitigation solutions which are provided by that industry. If I talk about life insurance companies, and also the general insurance, which actually deals into some of the health insurance part, and also for other related products. So that way it has evolved a lot, and now we see somewhere around 255 companies which are part of this universe from the listed entity I'm highlighting. And also we are seeing some of the tech evolution which are happening, which has led to the ease of transaction. And we have seen some of the huge number jump which we have seen in the last 5, 10 years, which is precisely from the fintech universe. So that way it has actually gained a lot. I mean, and then it is like providing a superior opportunity for an economy to grow. And that is how it has actually gone up. And just to give you a relation to how it has actually transformed, this is US market and what is the relevance of entire BFSI segment. So as I tell, financial services industry, it is the banking, financial services and insurance which are a part of it. So now onwards, when I am highlighting BFSI, it means the financial services sector, which includes all those which we highlighted in the previous slide. So it is not about one sector, it is about five industries which it caters to. So BFSI precisely, if this data is looked upon, this is S&P 500 of US precisely, where we look at BFSI is close to around 12% proportion, I mean the weight in the index. So more or less it has hovered around 13 to 15% kind of range. So it has relevance to even the US market over the last 25 years. So to relate it to India, I mean how that BFSI segment has grown. It was around just 13% mark during the 2005 era, which is now almost again kind of 20 years story. Now we see it to be growing to around 37%. So that way, I mean, it is true to label when I highlighted that it is fueling the India growth journey, which actually is transforming through this number, which you see 13% growing up to 37 plus percent. And question may arise in our mind when you are looking at it. Any reason you find, I mean, in your chat box you can put why we see that 13% has gone up to 37%. So please write in your chat box. Let's it be more engaging. And then we'll see some of the data points in the forward-looking slides where we will highlight why this has actually happened. So 13% growing up to 37%. Any rationale behind why it has gone up so much in India? So this is one data point which is very interesting one to look upon. I mean, we have tried to dissect many of the opportunities which we see in this segment. As we look at this, if you relate it to India GDP, as I highlighted in the initial discussion, that whenever we are looking at any economy growing, how your banking and financial service is supporting it. So if you see India, the entire story on GDP, it has gone 10x in the last 20 years. So this is 2005 and 2025 data. So blue bar actually shows the GDP growth, which is 10x. Then you see the total market cap, which is the India equity market capitalization number. which is the orange bar, and you clearly see that it has grown 24x. But when you see the BFSI segment, which is part of total market cap, it has grown from just 1 trillion to close to around 90 trillion rupees. So this has actually grown 50x, 50x in the last 20 years. So this is how the journey had been for this particular segment. So the reason behind why it has happened, it is not only bank which has supported this, but there are many other non-lending structure which actually had come into play. If you see 2015, again, just ballpark it to how this shift has happened. As I told you in the initial slide, it was around, what say, five industries, out of which banking was predominantly the one. It was close to around 70% in 2015, which has grown, or rather, the expansion has happened in the segment, and we have seen it. The banking segment has dropped from 70% to 57%. But when we see the other segments like your insurance, capital market, and fintech, they have grown to significantly around 30%, close to 20 to 25%. So that way, the expansion is happening in non-banking side of the segment, the sector, I would say. So it is precisely like insurance, capital market, and fintech. They have grown close to on 57 CAGR over the last 10 years. And that shows a clear amount of understanding and clarity that this is not about one segment. This is about the various opportunities which are cropping up, and this provides a great opportunity as we see some of the tech advancement happening in this segment. So to see, does it actually provides only the mature business which are part of it? So what we have done is we have dissected the entire segment into two, one being the mature business and other being the high growing segment, which are actually growing more than the nominal GDP. So in the last 17 years, what we have considered this data is 2009 till 2025, where it clearly shows that in 17 years, nominal GDP has grown by around 12%. But the high growth businesses like your NBFCs, mutual fund business, which we are into and we are talking about it, let's say the general insurance or the demat or the fintech structure, they have grown more than nominal GDP number. But the mature business also have equally generated similar return what the India economy has grown at that particular rate. So we see a mature business like LI or the banks precisely. We have taken the bank credit number here, which has actually grown in line with what the GDP. So if your number is growing in line with GDP and some of the segments of this entire sector is growing higher than that, then it tells a lot about what kind of proposition this entire segment brings in, which is the mainstream of the structure of particular country. So that way, banking and financial services sector remains a true reflection of India economy rise. And again, just to reiterate, it is not physical banking now; it is shifting into digital finance. The sector is actually evolving rapidly, and we have seen some of the numbers in the previous slides. And as India economy grows, I mean, the relevance of BFSI, of course, is going to shape up not only for the progress which we have seen in the banking segment, it is also about the capital market, the insurance, and the mutual fund business. Here, what we have done, we have dissected the data on the US market and India. So if you see a very interesting slide, the data on the purple bar, if you see on the left hand side, this is the capital market number, which was close to 44% in 2015. Again, the last 10-year data. This has grown to 60%. So now in the US market, overall market share, the BFSI, I would say, in the BFSI segment, capital market holds around 60% of the entire segment. But in India, actually, if you see the banking segment, which was around 75%, has reduced to around 50 plus percent. But the new segment which are coming up is like the capital market, insurance, and NBFCs, as it is hinting towards some of the opportunities which are coming up, like what happened in US. So this is just a relevance or the reference we have tried to gauge in here in this. So non-lending is helping to accelerate the BFSI sector in India as well, is what we intend to from this slide. Then the reason behind non-lending part like capital market, what is that is leading to these kind of appreciation which we are seeing. So this data, what we have dissected here is total trading volume. of the entire cash future and options which are in the, I mean, in the direct secondary market trade which happens. So close to around 739 billion of rupee which was traded in 2015, which has grown to close to around 4,000 billion rupees. Now it has grown at a 5x growth rate over the last 10 years. This actually has happened not because we are a population, but we have whole lot of participation in terms of PAN card, which has grown to around 8 crore, where the population is 145 crore. But your unique NSE investor has gone up almost close to 4x. So the entire again tech advancement or the participation on the demat account and others actually has led to this kind of shift which we are seeing in the capital market. Second interesting data is relevant to what we are talking about is our industry, and we take pride in highlighting that. The AUM number has gone up from 12,000, sorry, 12 lakh crore to close to 77 lakh crore. This is September data. So the industry has grown almost 6x. The mutual fund industry AUM has grown almost 6x, which we all are part of, and we have seen that journey, which actually is translated well by the investor participation. What we see in this data again is in just in the last 2020 to 25, which is last 5 year data, the unique MF investor count has grown to from 2 CR to close to 5 plus CR. So unique investors, I'm saying. So again, the participation from all around, I mean, the population of the country is actually supporting well. As I highlighted, we are fueling the India economy growth, and BFSI segment is doing that. Not only banks, but there are other segments like capital market, insurance, AMC business. So this is also one of the segment which is actually helping the India growth story and also the strengthening of BFSI segment. Last but not the least, because we are into some of the world where entire segment is talking about AI, the artificial intelligence, and some of the support which tech is actually giving, we are able to transact more. I mean, the volume is increasing. So you are per individual growth, which contribution which we are doing, which we call it per capita income, is growing in India. That is also leading to huge amount of participation from people, and how people can actually do like in our business also if we are doing, I mean, how will people be more convenient to do that kind of transaction? It is all fintech, so fintechs are showing significant potential expansion, and that is actually going to expand in next 10 years. If we see the data here, just to give you a highlight, some of the fintechs which has come up in India is close to around 12,000 fintechs which are part of India journey. But in US, if you see, it is close to 40,000 fintech companies. But then as India is progressing, we see the participation of UPI payment, which was just 7% in 2016, is close to around 50%, which was like 6 trillion rupee, which has gone up to around 100 trillion rupee now, which is going to grow at roughly around 3.8x to around 66% of the participation. So if we see here, UPI transaction will be the lead transaction in the entire consumption segment for India. So that way, if you see the journey for BFSI sector growth, I mean, it is humongous, and that is always to be taken care of and considered from the fintech evolution which we are seeing in this university. So, any guess from you what could have been the return journey of financial services sector in the last 20 years? As we have seen the market cap growing, we saw Nifty weight contribution to be around 37%, and the kind of segments which are coming up like non-banking lending and others, capital market or fintech and others. So this data is actually about the Nifty number, which is the orange line chart, and blue is about the Nifty 500, and the green one is the Nifty financial services sector. Any guess what could have been the last 20-year return or the kind of doubling which has happened? So 1,000 rupee invested in 2005 could have grown to what X? 20,000, 30,000, 40,000. What is your guess for this particular number? You can put in your chat box, and it'll be interesting for us to know what is your thought. So after looking at the entire discussion we had, please share in your chat box what could have been the financial services index return in the last 20 years? Any guess? Anyone who wants to take that up? Please, you can unmute and highlight. I mean, you can, it's for all of us to discuss this point. Any guess what could have been the return of financial services segment? No? Am I audible to all?
I think it should be close to 15% as per, I mean, considering Nifty.
So what could have been the growth, sir? Say 1,000 rupee invested in 2005 would have grown to what? 30,000, 20,000, 50,000. What could be your estimate?
It could be around 50,000.
Okay. Anyone else? I mean, who wants to take this up? Because there are huge amount of support which we have seen, being
Uh,
in capital market, being in ROE returns. I mean, the growth path which we have seen of this segment.
yeah, so sir, CAGR is almost 16%.
Okay.
Yeah,
So could have been the
16%
growth.
CAGR from 2005, I can say, annually
Right.
basis.
And compared to Nifty, what could have been the alpha? I mean, the return outperformance. So precisely right, and as you are rightly highlighting, the returns have been significantly higher than the entire broad market, which is Nifty. So this segment has generated 28x return in the last 20 years. So close to the amount which was invested, say 1,000 rupees in 2005, actually it has grown to around 28,000 rupees. So in the last 20-year journey, where we see Nifty and Nifty 500, which has grown to close to around 16,000 rupees. So that is the kind of alpha creation opportunity. That is the kind of extra return opportunity which we can look into when we look at this segment. Because there is an opportunity which we highlighted in the previous slides, and there are some certain segments which are coming up, which are great opportunity looking forward also. And as India grows to be more tech-driven kind of business opportunity, and we are seeing many organizations coming into organized way of looking at work. So that way, the participation is going to increase, which can also be dissected into the last again 20 years which we have seen. So one question came to the us that whether point to point return could give you a right highlight. So we also dissected data on the drawdowns. These are some of the year on year return which we have populated here of the financial services market versus the broad market, which is 500, because there are 255 stocks which are part of this segment. So it is a broad based segment. It actually hovers across large cap, mid cap, and small cap companies. So we rightly checked it with Nifty 500 numbers. If you see the number, I mean, the outperformance of this segment had been almost 13 years. It has outperformed compared to last 20 years. And there are certain corrections which we have seen, like the balance sheet correction, the reforms, and some of the segments which have actually come into. These are the underperformance years for this segment, like 2020, 2021. We all actually experienced that segment during that period, and also even 2023, 24. But interestingly, this year had been substantially better for this segment. It has actually performed more than 20%, and the outperformance was close to 12% for this segment versus the 500. So that way, I mean, the digital adoption and credit expansion boosting this performance, and that could lead to some of the great potential opportunity way forward what we look at this segment. So to also answer one part, which is very interesting to know whether I need to take that much of risk, because being a sector, I mean, if I look at creating a portfolio, what could be the risk I am getting into if I am looking at from allocation perspective for my investors? So always the question comes is like whether I can propose this kind of sector to my clients or not. So that is the one question which always hovers around our mind. And we always get deflected with some of the thoughts that only return is the criteria or the risk adjusted return is the criteria. So on a long-term basis, if you look at the number on a 10-year basis, the returns which financial services segment has generated is close to around 2% higher than the Nifty 50 number. I mean, Nifty is 14% and this is 16%. But the kind of risk which you are taking, this is the standard deviation number. Is almost closer or lower than the Nifty number as well. So to give you a one number, financial services has generated 16% return. Nifty has given 14% return. This is the standard deviation number, is almost closer or lower than the Nifty number as well. So to give you a one number, financial services has generated 16% return. Nifty had a standard deviation of a sector fund. Yes, of course, I understand, and we also know the risk is there. It is the high risk return opportunity. But when you look at the entire risk adjusted return profile of the segment, the kind of opportunity it provides, I mean, the risk adjusted return basis, it looks to be a fair opportunity when we look at it from the broad based market comparison opportunity basis. So that way, what kind of investors could look into investing in these?
It seems that Mr. Chandra got disconnected. He will be joining in shortly. Just wait for some time.
Sorry, I think it got dropped somewhere. If anybody can highlight
Yeah, it got dropped. I mean,
on which slide? Sorry, I mean, I think the network got patchy. So this slide
uh,
or previous one?
the previous one.
This one?
Yes.
Okay. So I was highlighting about the kind of risk which this segment takes. I mean, here what we intend to highlight is the 10-year return. Let's say 10-year basis Nifty return, Nifty 500 and financial services we have taken. So let's say we compare with Nifty 500, which is the very broad market opportunity, and it actually has all market cap, large, mid, and small. So 10-year basis, financial services has generated almost close to 1% higher return. And the kind of standard deviation, if you see, Nifty 500 is close to 4.2% standard deviation, the volatility on a 10-year rolling return basis. Financial services was close to 3%. And even on a 5-year basis, if you see, it had a huge amount of risk on the Nifty 500, which is 10% volatility. And financial services are just half, almost close to 5% volatility. And it generated equal amount of return. So point I want to highlight here is the risk return basis we should look at any of the sector or the segment. And this actually tells a lot about what kind of what you say, the volatility which it captures, the kind of lower volatility as compared to broad market, which clearly is shown from this data. So it is interesting to know that the risk adjusted return for BFSI segment is fairly there, and we should look at some of the opportunity in this. And if you broadly, of course, we all understand what kind of positioning of this sector fund is, because these are some of the sector funds which are, of course, higher than the, let's say, small cap, mid cap, or multi cap kind of products. So one should look at these funds from a satellite allocation perspective. And so, who should invest in banking and financial services sector funds? An investor who is positive about the market, India. I mean, who looks at GDP to be 6% plus. I mean, the belief should be there that India growth story is intact. And of course, we have seen in the past data that the banking and financial services sector actually reflects the India growth journey and the growth story, and it fuels the India economy as well. So that way, one should be positive about the segment, precisely positive about India growth story. And Of course, he cannot be a first-time investor who should look at these kind of sector funds. Of course, the optimization in terms of volatility, what it provides with the kind of return it generates, it is a fair amount of risk-adjusted return basis portfolio. And of course, one should not look at less than 5 year in these kind of funds. So very clear. Financial services sector is a multi-decadal opportunity for experienced investor who have high risk appetite should look at this fund. Rising income, which is going to drive the savings, investments, and insurance adoption, which actually would cater to the opportunity which the segment provides. Financialization in India growth multiplier story, which I think still is intact, and way forward we should look at this segment to be further expanding as India economy grows to 5 trillion to next trillion economy. And that is where I would like to stop. And maybe I can take up the questions if you have any. Anshu, Amisha, anyone, if you have any question, please let me know.
Sure. I think there's no questions at the moment from the audience.
All right, thank you.
Sure. So then we can close the session. Thank you, Mr. Chandra, for joining for this session. We appreciate you making time for this and sharing your valuable insights with us. Thank you once again from Engine team.
Thank you, Engine team, and thank you all the participants for this lovely evening insight. And wish you all a Merry Christmas and a Happy New Year 2026. Thank you.
Sure. We wish you the same.